on that same regard, I mean, it's a matter of supply versus demand. And on the demand side, I think ETFs just add into that in such a big way, especially this year in 2025. And so it really depends on if Ethereum can get its North Star in order and it can like coalesce around some kind of narrative and actually push that a bit further.
This episode is sponsored by SKALE. SKALE has differentiated itself from other layer 1s by offering users a network of gas-free, interoperable EVM L1s where the user experience comes first. Explore the gas-free ecosystem at scale.space/ecosystem and follow their journey on X at SKALE Network. To learn more about the gas-free architecture and growth of the SKALE ecosystem, visit the SKALE Research Hub at scale.space/research.
Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed.
Hey guys, welcome back to another episode of OX Research. Today I'm joined by Mark, Dan, and OX Mims or Darren. We're representing all of the sort of internal teams of the research team today from Blockworks. We've got research members, data team members, and advisory team representing us today. So glad to have you guys on. How are we doing?
Always a pleasure to be here, my friend.
Yeah, happy to be doing an episode about ETH.
Yep, happy to be here.
Awesome. Mark, let the cat out of the bag. We are going to talk about ETH today. Maybe I'll just drop a glimmer of excitement into the chat first. The markets looked doom and gloom, I think, a little bit last week when we spoke. People were worried about macro fears, and I feel like the sentiment has completely 180'd in the past week since our last conversation. Is everyone rocking on their heels back and forth right now at this kind of crazy volatility up and down, or how are we feeling?
I'm not sure if this is just part of being in, second and a half cycle, but I mean, this volatility seems normal. I mean, if you like zoom out and look at the drawdown charts, like this is nothing. And I can't believe people are calling the top is in already. So, I mean, I'm not worried. I'm just trying to see if any gems come on sale while all of this fear is happening.
The AI token price action has been pretty funny over the last few days. It went from, AGI is imminent to, oh, wow, these things really are token scams, to AGI is imminent in about 48 hours. So it's pretty funny. It's like people suddenly remembered that these are like chat bots with a token, and then people immediately forgot again.
Yeah, I'm feeling kind of like similar way to Mark. Everything's just on like a sale, a buy one get one sale almost. Personally for me, I'm looking at like the AI sector since that's come down pretty hard, and like the DeSci sectors. So we'll see what happens there.
Yeah, I think good call out. It is funny to note that I think a lot of the AI tokens were some of the worst performers of maybe the prior week, and we're now looking at them being some of the best performers of the past 24 hours. Very big, turnaround, which is expected with maybe some of the most kind of speculative assets in the industry right now. Let's hop along though. Last week we talked a bit about Bitcoin and started to get into a little bit of an ETH discussion that got cut short. I think we wanted to just turn this whole episode into a conversation about ETH, starting off the year sort of like, looking at the majors and thinking about valuations, roadmaps, things ahead for them, and kind of level setting ourselves and the audience going into 2025. So maybe let's just kick it off. When thinking about ETH, I want to hear, let's start at the high level, and I want to hear like, what is the bull case for ETH? And maybe I'll give it to Mark to start off, and we'll go from there.
I'm gonna say bull case for ETH is ETH as money, as maybe as unlikely as it is. We're going bull case here, and on that same regard, I mean, it's a matter of supply versus demand. And on the demand side, I think ETFs just add into that in such a big way, especially this year in 2025. And so it really depends on if Ethereum can get its North Star in order and it can like coalesce around some kind of narrative and actually push that a bit further, because as we're probably going to talk into, it doesn't seem it's going to be like on the rev cash flow side, so it might have to be on the asset side. And I think if we can get that, especially with the ETFs, then that it could be a good 2025.
I mean, I don't want to like derail the agenda here, but on the okay, if you look at Bitcoin, obviously nobody is buying Bitcoin for its ability to produce cash flows. It's some other reason. Um, some people would describe it as money. Some people would describe it as a store of value. I think there's like an important distinction, at least like in my head, between the difference of those two things. I think of money generally as more of this medium of exchange side of things, whereas a store of value is a tool for transporting wealth through time. What I think Bitcoin got incredibly right was never like wavering from what it was trying to be for over a decade. It was like the beauty was in the simplicity. Like there's 21 million Bitcoin. That's that. Predetermined monetary policy is important in a world where that is a material issue for not only the US, but many nations across the world. So the question is like, all right, so ETH didn't exactly start as that. It started as more of this world computer thesis. And now it's pursued the role-centric roadmap, which is starting to show some signs of the fruitfulness of its endeavors, right? Like Base is doing incredibly well. You can argue about how good that is for ETH, but I think we'll get into that. But the point being that, in no time in the next few years is like the DA side of things going to replace the cash flows side of things. And so the question is, again, is how are you going to back into this moneyness factor or this store of value factor? And I think there's been a lot of good time on the supply side of the ETH, the asset, where net inflation is plus or minus 1.5%, basically no matter what happens, as is today. If no ETH is burned, you're looking at like positive, plus 1.5% inflation. That's fine. Nothing's going to break from that. And they want to try to get that lower as well, with a lot of the discussions going on around inflation. And if there is abundant activity, whether it be through blob fees or through L1 activity and base fees, then you're just pushing lower from that 1.5% number, right? And again, it can go negative. So I think that the supply side is fine. So that kind of like creates the ability for it to be the store of value asset. But now you need to like back into convincing everybody that that's what it's going to be. And that seems like the boulder that needs to get pushed up the hill, which like it did seem like everyone was kind of rallying around. And then the Ethereum Twitter handle tweeted like "Hello World Computer" or something along those lines for the first time in like many moons, which is like, oh shit, like are we back on the World Computer now? Like which one is it? And again, like I don't like the store of value moneyness thing. Like I think that's a great thing to back into. I don't think it's a great thing to pursue. The World Computer is like what got me into crypto. That's fucking awesome. That's so cool. That's what I want to build.
I kind of definitely agree with you on the money side. So like when I said money, I kind of meant store value, not medium of exchange, not unit of account. So let's, I might use it interchangeably, but Bitcoin didn't always have this clear thesis, right? 2017, 16, there was this big block moment where some people wanted it to be bigger blocks to use it as cash, but people were happy with the way it was and more as like digital gold. And, with Ethereum, I'm also kind of going to push back on the supply side. Yeah, you say like 1% is fine. Yeah, it is. I mean, like Bitcoin probably had more than that for most of its lifetime. But, you know, regardless of whether it's money or not, an asset that has negative inflation, an asset that's decreasing over time, becoming more scarce, I think that's like super important. And that's almost necessary for it to become a money to get that narrative going, because Bitcoin's one was 21 million. There's never going to be any more. That scarcity helped push that narrative. And I think if ETH can go back to negative inflation, then that can help push that narrative more. And then I see stuff like you said, Ethereum's tweet, "Hello World Computer," and it's like, okay, so it may seem trivial, but I was like, I retweeted it and I was like, okay, so is this the new North Star? Is this what we're going to go with? Because, if they're going to start to push everything off of the L1, then it's not really a world computer like. I mean, Bitcoin L2s might be coming up within, I don't know, a decade, given how quickly they move. But I mean, I still don't think that if Bitcoin moves to a roll-up centric roadmap, it will take away from its moneyness. But I do think that ETH needs that narrative, and maybe the person behind the Twitter account still hasn't figured that out either.
Darren, you have any thoughts here?
No, not really. I mean, I think Mark has really said everything that I wanted to say in response to Dan's points, which is just that like we have a really good like inflation rate going on for Ethereum right now, but we could get it even lower, and that like our current like supply dynamics like arguably work better than Bitcoin's in the long term. Um, and yeah, that's the main point that I want to just lean on and add in there.
Maybe let's jump to the inevitable discussion of REV then, economic value, and I'll be Ryan Connor for a moment and kind of segue us into the cash flows discussion. I guess there might be an opportunity to kind of get that real inflation rate to a negative value. Or another way of thinking about that might just be to find additional ways to increase cash flows to Ethereum holders essentially, or to Ethereum, such that that inflation is offset by incoming flows of value that offset it and make it a value, make it an asset worth holding, like you might expect from a company that can grow revenues and reduce its cost over time. Dan, how does this kind of play into the ongoing kind of battle or conversation between like trying to be a store value asset versus maybe how we think about value of economic sort of flows on Ethereum?
Yeah, so like the discussion around the inflation rate is the supply side, and when there's a supply side, there's a demand side, and demand is users transacting on Ethereum, whether that be to directly execute L1 transactions or whether it be to purchase blobs. It's all the same from a perspective of demand. So when we look at this chart we have up, which is the Ethereum network REV since 2020, you see like a cyclical decline in REV. Peaked out around 2021, shortly after the introduction of the base fee. I think it was November of 2021 was the highest month. He cleared, over $2 billion in a month. And since then, I haven't even like flirted with those levels. And on a more industry-wide basis, Ethereum has historically been the industry leader in REV, which again is a measure of user demand to transact on chain. It is the fees paid into the system. It has lost its throne as the number one demand-based chain in terms of monetary demand, of course, to Solana. So we've talked about that a bunch. I won't harp too much on it. I just think it's an interesting perspective to say, like, you see the pendulum like swinging away from the cash flows and back to the money thing. And to me, it's like, well, how much of that is because the demand side of the equation wasn't optimized for, and now cash flows are in a cyclical decline. So you can't talk about how that's the driver here. And it's like, well, what else is the driver? It's like, oh, it's money. And to me, I think I mentioned earlier, like something to the effect of, it's hard to back into the money thing. I say that because, if you fast forward 100 years and, something like global oil trade is settled on a blockchain and that is denominated in ETH will be money. ETH will be a store of value. People will buy it for reasons beyond the cash flows because they need it to buy oil, which powers the country, right? Like that to me is how you're going to, a more interesting way to be backing into this money thesis rather than like, a couple degens on an L2 that denominate their portfolio in ETH, right? Like, sure, my base AI meme coins are denominated in ETH, and every time I buy and sell a meme, I'm trying to increase the number of ETH. That doesn't mean I'm like viewing ETH as money. That doesn't mean I'm like using it to transport wealth through time. It means I'm gambling. So it's not like the most compelling thesis to me. And every time I definitely intentionally stir some of these debates up on Twitter because I really want to understand this perspective better. And I don't know, it's like it was Jasper the Ghost I was having a good conversation with over the weekend, and I enjoy having these discussions. I think they're fun, and I don't think they're ever in bad blood. So I don't mean this in a negative way at all, but he was talking about his perspective on the moneyness of Ethereum, and it's like was talking about how ETH can be used as collateral. So it is a good. It's like increasing the moneyness of the asset, and that's how it's driving value. And to me, that is like a completely backwards view because for something to be a good collateral in DeFi, it needs to already have value, right? It's like there's a chicken and the egg problem here, and to me, it's like his point was, well, if it's already a store of value, it's already money, and that's the reason why it has value, and that's why it's a good collateral. But I just am totally unconvinced that that is the case today.
Yeah, I'm gonna unfortunately agree there because I don't think ETH is money. At least it's not good money. And Danny asks, what's the bull case for ETH? And the fact that they're pushing execution away means like the last bull case for ETH might be ETH as money. I mean, I would love if ETH kind of slightly tweaked their roadmap and did native rollups, as in rollups that are native to the L1, launched by validators. They're part of the client. They're part of all these different clients, and that way Ethereum could capture some of those execution fees directly. And then, if anything, that might help it more with the moneyness because it's being used more across the ecosystem. That being said, if you just look at the current landscape of ETH, of the ETH rollups, like Base, that's the most popular one. It's it has the most users, transaction fees, DEX volume, you name it, right? And one of their newer implementations is to replace gas fees with USDC. And, obviously ETH is still going to be burnt in the back end. It's just being abstracted away from the users. But the fact that the users won't be seeing that this base asset anymore severely takes away from it having any kind of monetary premium there. And this is not going to be a flash in the pan. This is going to be a trend. Like, across all of crypto, they have like 13 million active addresses, give or take, right? But if we're really going to hit mainstream, you cannot be denominating these fees and these transaction fees in something that's very volatile and something that users aren't familiar with and basically looks like magic internet money, right? You need to denominate it in something they're familiar with. And if you're going to take away anything from stablecoin domination, particularly USD, like it's going to be denominated in that. And I'm sure everybody, when they look at their own like MetaMask or Phantom wallets and they see what transaction fee they're going to pay, they're not looking at the soul, they're looking at the dollar value of it, right? So it's kind of, slightly already happened anyway. But I mean, the way that I see rollups going and evolving, it's just going to be more of that abstraction and making ETH further away from like the base asset and the asset that you see in DEX pools and whatnot, especially as we start to adopt like more real world assets.
Yeah, I think you hit on a really important piece there, which is, okay, so if it's like, what's going to make it money, right? It's the belief that it's a good medium of exchange, or if it's like more of the store of value side of things, it's a good tool to transport wealth through time. On the first piece, I think you're dead right about the whole fact of L2s not using ETH as the gas token, right? If the only thing that matters is the fact that ETH is burned on the back end, then well, then okay, they're just saying the only thing that matters is REV, which is, I guess kind of antithetical to the point that it's money, right? And so if the user doesn't need it to pay gas, I don't think that's the only like money like use of ETH, right? If I could like buy goods and services with ETH, that's equally as useful as paying gas, but that's not a huge sector either. So then it's like, what is the value that an L2 is bringing ETH? People always point to the amount of ETH on the L2. This is not like a super compelling number to me for this discussion, because it's like, okay, it's sitting there, but what is it doing? And if the answer is just being like parked in Aave, okay, like this is so circular and there's nothing that's driving the value to it. So also, collateral rapidly degrades in quality when the price decreases. So that also gets a little bit of a chink in the armor of the narrative there as well. So this is why I'm like left scratching my head with what is going to be the thing that drives it forward. And not to mention with Coinbase specifically, they are offering gas rebates on transactions that use USDC. Now we're tracking this number. It's a super small percentage of activity today. It's like less than 1% of all activity, but they're incentivized because they have their own business case for why they want USDC on chain. And Danny, you just had that one chart up of the REV distribution of Coinbase, specifically looking at just last quarter. So Q4 2024. They did about $30 million in total network REV, which is like 3 streams of transaction fees. About 70% of that comes from priority fees. So when you look at that $30 million that came in the front door, so what users pay to use Base, and then look at where it went, Coinbase got 23 million of that, so roughly 2/3. Optimism Collective got $4 million through their revenue share agreement with Base for licensing the OP stack and being a part of the superchain, more importantly. And then Ethereum got $2 million. So Ethereum got like what, 1/6 or 1/60th of the total, and sorry, 1/15th. That's terrible math. 1/15th of the total, and Optimism Collective got double the amount of value that Ethereum got. Right? Optimism Collective took in more value from the existence of Base than Ethereum did in terms of dollar value. So then, okay, if you're trying to counter that and said, no, Ethereum got more value, like where is it coming from? Because it will be increasingly less used as gas. And yes, there's a lot of ETH on the chain, but what is it doing? Okay, like the hottest app on Base right now is Virtuals, and it pairs its own DEX, its own AI agent tokens with its own token, not ETH. So it's like, I don't know. Like I'm genuinely trying to pursue this because I want to find out what the value driver will be, and I keep hitting these dead ends, and that's the challenge that I've been having.
Yeah, I think you can maybe steelman for ETH here a little bit, in that the potential opportunity here is to have, not just this one base statement, but maybe there's hundreds of bases, right? And they're all contributing a little bit to ETH. And maybe they're not all contributing to the OP Collective or Coinbase. So that adds up to a larger sum. That doesn't really reflect the reality today. The reality today is that a large majority of all of the L2 activity is either driving on Base or Arbitrum, and it kind of dwindles from there. So I agree with your point there, Dan. It does beg the question of, like, does Optimism and then therefore by extension Coinbase, like, is the business model and revenue model of the OP Collective greater than that of Ethereum itself? And like, do we have a valuation mismatch here of OP to ETH as it stands today because of this picture? I mean, we have Kraken coming out with Ink that's going to join, the OP Collective as well as another L2. So if they're able to scale in a similar way to Base, like, does that further propel this potential viewpoint?
I think that's a stretch. I think you're pointing a loaded gun at me. No, Ethereum's a $300 billion asset, and it has. I think a lot of that value comes from the value of the lendiness of the L1 specifically. Again, look at the amount of stable coins in the industry, and look at the percentage of them parked on Ethereum. It is staggering. It is staggering. That is a huge edge that it has. It has still some of the best developers in the space that have built OG DeFi protocols that are still building on Ethereum today. The L1 is why I think it has this valuation. I can't remember who said it, but honestly, they articulated it in such a beautiful way that is like exactly how I feel about how these assets are valued today. Is basically like, what is the market opportunity here? And it's to be the smart contract platform that operates the global finance and global trade. And the TAM of that is huge. So everything is trading on their probability of winning that sector, or their like end state market share of that sector. Right. This is, in my opinion, this is why older protocols tend to have very high valuation still, is because, you rewind to that era, and when Ethereum launched, it was the only shot at like getting exposure to winning that TAM. And then, competitors gradually came online, and it's like, okay, like even if they only have like a 2% chance at winning this, like this thing's going to be worth a lot. So I think they have these like lingering bloated valuations because that's sort of how all of these things were valued. And that's like not atypical, I don't think, of venture investing on these startup companies that are like trying to break into this very large market. So I don't know. I think that's kind of the piece here I'd push back on is like, yeah, like this Base specifically doesn't look great for Ethereum value accrual, and doesn't look great for ETH moneyness, and it's great for Optimism, but Optimism does not have a lot of what Ethereum does have on the L1.
Yeah, I asked a very intentionally loaded question here. I wanted to lead into this data and then sort of postulate about the future of Ethereum. If we're thinking about this continued roadmap of driving more and more execution and even assets onto L2s and away from Ethereum, does the future picture at some point look drastically different than it does today, where maybe there are hundreds of billions of stable coins and still a large aggregate amount of value and trade activity occurring on the L1. Does the future state look different from that? And if it does, like, what's then the impact of, the L1 to L2 relationship?
Darren, what
Sure.
L1 improvements are we going to get in Pectra?
In Pectra, L1 improvements, we're not really seeing any. Unless, yeah, I was going to say unless like gas limit increases come, but that's not coming in Pectra. That's just a product of like validator voting. Yeah, so no improvements for the L1 execution on that front.
One more question wasn't there something about block times getting shortened that was up for discussion and potentially being included? So A, what happened to that? And then B, what is Pectra timeline?
Pectra timeline is still, so I'll answer that backwards. Pectra timeline is Q2, end of Q2 for this year. And then as for the shortening block times, right? I actually don't know. Let me find that really quickly.
In the meantime, I just pulled it up. Data Always is my go-to person on Dune for ETH-centric data. Huge fan of their work. And right now, 26%, 25% of blocks in a day are signaling for an increased gas limit. And I don't know, you need like a pretty material percentage of the network to be opting in to actually drive a change here. But if I just pull up Etherscan really quickly, go to the last block and look at the gas limit. Let's see, oh, here we go. Yeah. So it's like just above 30 million. So 30 million and 30,000. So I don't know, it's like what, 10 bip increase in total gas. So yeah, 20% of the network is opting in, but there's probably a few large players that are dragging their feet there.
I don't understand how that number isn't going up more quickly. Like there needs to be probably more of a fire behind them to get this up. And it's just I think they're trying to increase it to 36 million. It was originally 40. It was the original push, but then they found some kind of bug at 40, which they need to fix. So I think that's why the new target is 36, which kind of shows the importance of client diversity as well. If the 40 million had gone through, but I mean this increase in the gas limit and pivoting to DA and the eventual reduction in fees, whether it coming from DA or base, is kind of why I'm on the camp of we need to lower the staking rate in Ethereum, because it's there's minimal viable issuance, right? We don't want to be overpaying for security, and every single other blockchain forever has done fine. Let me not exaggerate and say every single one, but most of every single major one has done fine with much less issuance, much less security, and so I don't see why Ethereum can't do the same thing. And there's also proponents saying it could help with LSD market share, which is another issue that Ethereum has through their own fault of trying to be letting the free markets have their way.
I will jump in here and say that well, two things. One, for reference, the EIP for lowering block times from 12 to 8. This looks like it's largely been abandoned. The last update was back in October, so I would just assume that this EIP has been completely abandoned. It's 7782 for anyone's reference. And on a side note here, going off Mark's point, I would like to see something similar to the difficulty bomb, I think, implemented for the gas limit in some way, or just increasing the gas limit. I'm not sure if it would be possible to do something like that, but so for example here, the blob limit and blob target is going to be increased on a schedule per EIP 7840. And so I think putting some sort of schedule that would at least schedule a vote or something to be pushed to validators to raise the gas limit might be something that would be beneficial to the network. Although, that would still run into the same problems as right now, which is just that not enough people are signaling that we should raise the gas limit. It would still probably be pretty slow. You need something that's a little bit more quicker, like a snap change, I guess. but then you have the pushback from like the different client implementations, right? So we'll see.
It's funny that October was when it was last edited because that's around the same time. November is when the elections happen and number starts to go up and then everybody starts to stop caring. And I think that's around the same time where Max Resnick also stopped caring about Ethereum, maybe behind closed doors. But yeah, it's just funny that October is when that happened.
Does this just turn into a much stronger, like, push and pull kind of discussion around both or either raising blob targets as well as raising gas limits? Because I think from, like, if we think about it from the economic standpoint, we've just talked about kind of the how much value is driven based on the execution that happens either on the L1 or the L2. So obviously there's an ongoing trade-off if L2s continue to scale at a greater rate than the L1 does, and you push more execution to those places and then drive a lower fraction of kind of that revenue running back to the L1. Are we getting to a point here where, like, I think for a time there was this gung-ho mentality of, like, make a million L2s, let's get blobs, let's scale the heck out of blobs, like do tons and tons of them. And I think now this opinion of raising the gas limit on the L1 and potentially even getting to this conversation of maybe even raising hardware requirements for L1 validators, like, has come more into the fold since this has become a topic. So, like, how are you guys thinking about that? Like, the way I see it is there's this push and pull happening where, you see L2s doing well and generating a lot of value for themselves and generating less value for the L1. So it then drives this sort of response action of, well, maybe now we actually do need to scale the L1.
I'm going to share a screen here and show a chart of why I don't think the whole idea around a million L2s makes a ton of sense. So Grow at the Pie does a great job of curating data for like most L2s. I don't think it's only rollups because, like, I don't think Orderly settles to Ethereum at all, but I could be wrong. Or like Manta Pacific, like I'm pretty sure, like I know they use Celestia, and same with Derive. So I don't really know, but honestly, it's not even a material portion of the analysis. So we're going to include everything. And right, like the huge blue section of this chart is Base's market share of total transaction fees. And at the current, as of yesterday, 75% of all transaction fees across every L2 tracked by Grow the Pie, which I think that's the best source for L2 specific data. 75% of that is Base. So there's always been the idea there's going to be a power law effect play out. And it's happening like very quickly. And Base is just becoming a black hole. And so, if you're a developer, you have an app that you want to build, like, where are you going to launch it? If you want to build on an L2 and that's like you've decided, you're basically picking between Base, Arbitrum, ZK Sync, maybe Linea, maybe World Chain has its own sort of incentive to come build there because of the whole idea that there's only people there and less bots. That could be interesting for a developer, but largely, where's all the activity happening is generally where you're going to want to be, and that kind of becomes this snowball effect where it keeps growing as more activity moves there.
Hey everyone, we'd like to give a special shout out to the sponsors of today's episode, SKALE. SKALE is built different. Unlike other layer ones, SKALE is offering users a network of gas-free, interoperable EVM L1s where user experience comes first. SKALE operates like the AWS infrastructure model where developers pay for space in the network in SKALE tokens to validators. Essentially, SKALE has chain fees and not gas fees. This allows for free transactions on SKALE and has saved 46 million users over $9 billion in gas fees. Explore the gas-free ecosystem at scale.space/ecosystem and follow their journey on X at SKALE Network. Visit the SKALE Research Hub to learn more about the gas-free architecture and growth of the ecosystem. That's scale.space/research.
The only way I think that this works out for Ethereum is if like all the major financial institutions start to launch their own L2s, and with this good interop, it's cheap to run, it's abstracted away, and that kind of thesis, we still have to see if it's going to play out. Like, it's one thing for Base and Kraken to do it because it's native to a crypto audience, but we see, I think Deutsche Bank is launching on ZK Sync's Elastic chain. What kind of traction is that going to get? We'll see. Like, there is that financial overlap, but there's also going to be some kind of regulatory uncertainties. I I can kind of see that working in a sense. Maybe if there's multiple of them all across every major bank in the world, assuming they don't want to launch in any other chain, which is a far stretch. And then secondly, there's also maybe what non-financial L2s. Like I saw that Sony is partnering with Asta, a former Polkadot chain, and they want to launch an L2 through a JV called Sonium, which I haven't heard anything about in quite some time. But but even if these chains start to launch and they start to have meaningful activity, like in the next 2 years, Ethereum still might not benefit because their DA capacity isn't enough for it. Because we're seeing like chains like Eclipse move to, I mean, not move, but choose Celestia as their data availability layer because Ethereum just can't handle it because they're prioritizing like keeping node requirements low. And I assume the same is going to happen with like Movement and some of these other ones, just because, not because they don't want to, but just because it makes more economical sense and technical sense to move. So even in that kind of scenario, where we do get a lot of roll-ups, like is Ethereum even going to capture DA fees from that when they can't even handle the capacity?
Yeah, I think that's absolutely a fair point. Eclipse is a very unique one because it can't fit on Ethereum. Based on the three today, and Ethereum is absolutely scaling its DA. There's no question to be had there, right? Even in Pectra, Darren, jump in if I'm wrong here, but like there is a increase in the blob count. I think it's a double on both the target and the limit.
Yeah. So, I was just gonna say it's gone from 3 to 6 for the target, and the limit's going from 6 to 9.
Okay. So not a double on the limit. Got it. So yes, there's an increased capacity for blobs coming, and that will continue to happen, right? But Celestia is moving faster, and I think their end state roadmap is a more throughput than Ethereum with pure DAS. Don't quote me on that, but I believe it is 1 gigabyte blocks, 1 second blocks. I think that's just more than what Ethereum's targeting. So the idea of the whole premium DA thesis, like that's complete nonsense to me. I don't think things are just going to willingly pay more than they need to. And so the cost side of things doesn't make sense. Celestia is still like 90+% cheaper than using Ethereum blobs. So like Arbitrum will never switch. ZK Sync will never switch. Base will probably never switch, but you could see a world where that's not the case. Thanks for pulling this chart up. Like the cost for 1 megabyte of data on Ethereum blobs is somewhere in the neighborhood of like $3 to $4 right now, and Celestia is like 10 cents, 15 cents. And there you can also see the change in volatility. And this is a log scale because you wouldn't even like really see the pink line, which is Celestia on this chart if it wasn't, because call data, of course, is so expensive. So it's like where I think the throughput we're seeing on rollups today is not representative of what they will be in the future. I think Eclipse is a very good taste of that. Eclipse is doing it. They're doing like a tap game. So it's obviously low quality activity. It's not like high financial DeFi value or anything like that. No shame to them. I think that's interesting, right? You can run consumer applications that are very, very low cost on Celestia rollups, and you can't do that on Ethereum. That's like an advantage that Celestia has over Ethereum today. So I think you're going to see a shit ton more DA consumption, and I think it's going to be very cheap. And I don't think Ethereum's well positioned to capture a lot of it.
So for what it's worth, or I guess to put in perspective, just pulling this up now, Celestia's Mammoth Mini, like testnet, and so again, like testnet, this isn't like a mainnet performance or anything. They saw like 27, I could be wrong, megabytes per second for DA, whereas Ethereum is targeting 32 megabytes per block, and that's on an unknown time frame, so that could be like 2+ years out. So I won't say that the DA outlook is bullish for Ethereum, because I don't think it is, frankly. But just wanted to throw that in there.
Yeah, just like it seems like Ethereum's community is getting pulled in all fronts, Ethereum is as well. It's trying to maybe do too many things at once, which is something everybody's talked about for quite some time now. And Henry Ford, perfected specialization, and Celestia is doing it for DA, Solana and Sui are doing it for execution. So it kind of leaves settlement, that little fuzzy, blurry thing, which is such a tiny portion of fees that I don't even know if a million rollups would make a dent for settlement fees. I mean, I guess that's the state of where things are now.
Yeah, I think it harkens back to your point earlier, Mark, that if Ethereum had enshrined a native rollup and then basically recaptured the value of that execution by basically owning the sequencer itself, rather than allowing Coinbase, etc., to go and do it themselves and capture that. They basically have missed out on that opportunity in that way. And like Dan had pointed out, almost all of the activity today is happening on Base. Like, you could have realistically just made one roll up and scaled the heck out of it and captured basically all of the activity that you needed to. And I think their Base's scaling targets are pretty ambitious, far greater than where they're at today. I think their North Star is they want to be doing, I'd have to go back and look at the numbers, but like a gigabits per second in gas or something along those lines, or gigagas's per second.
Yeah, gigagas per second, which is significantly higher than what they're doing today. For comparison, I'm pulling this up, but they're at about 20 mgas per second. So like that's another 500 times higher. So they're trying to scale. This is the TLDR.
Is it really impossible for ETH to...
Sorry, 50 times higher. I'm doing horrible math today.
Is it impossible for ETH to do like not necessarily a 180 or like just start to, I guess, double down in some ways on like the native rollups? Because I don't think that's like that far of a stretch for Ethereum. What that really means is just like maybe putting those like minimum node requirements in place, right? Or maybe just like letting or pushing that EIP through to like reduce block times, right? And that would already just be a massive benefit to like the native rollup scheme. At the same time, there's still like the massive amounts of liquidity on the L1, which like those could take advantage of, right? So I don't think that narrative is entirely dead quite yet.
I agree. I don't think it's too late for Ethereum to do it, technically speaking. Like, it's, you can implement it. From a social standpoint, I think it becomes a little bit trickier because, and here's the irony, right? I mean, they've, for 4 or 5 years now, they've, purported this roll-up centric roadmap, and a bunch of teams, hundreds of people, thousands of people and teams have built their roll-ups, VC money funded, and based on this vision, right? And then for Ethereum to come and have their own native roll-ups, increase some of the hardware requirements, is almost like rugging this community that they've led on for the past 5 years. But that being said, I'm thinking, isn't Ethereum supposed to be credibly neutral? Like, why are you favoring these people? Like, you pivoted away in your roadmap prior when it used to be execution sharding, and you pivoted to the roll-up centric roadmap, for whatever reasons, the free market element of it, and because maybe they couldn't solve execution, so they wanted to push it off. But now that the free markets have essentially done the hard work for them, I think if they were really credibly neutral, Ethereum would create some kind of enshrined roll up, or at least put it on the roadmap in a sense. Could be a ZK1 because ZK tech is coming. I mean, Succinct's SP1 is letting any OP stack roll up change to a ZK roll up with, like a few lines of code. So it's definitely technically feasible. It's whether we have the actual push to do it. And I would love to see that, even if it's analogous to the 2017 Bitcoin block wars. Like, let's get that on. Like, let's see what happens when you actually have an Ethereum with a native rollup side. That's what I want.
Is this driving a fork in the community in the future, Mark? Is there some inevitable outcome here where there's some split? I mean, I think we're getting into some early innings of that, right? With some people going into different ecosystems over, debates over about scaling the L1 or scaling consensus in L2.
I think people leaving for other chains that are pursuing the visions that they've personally more align with and want to pursue is like the 2024, 2025 version of like a hard fork. You don't need to like fork the whole network, and because that's just so damn hard, especially now that these systems are larger. I'd be very shocked if we ever saw something like that again. That's just it's like a true 50-50 split. Nobody's budging. I just watched Juror Number 2 on Netflix, and it's like, we have a hung jury, and that's the only path forward is not a retrial, but like a hard fork. Yeah, I don't see that happening. In the case, like Resnick's a good example here, where he had these ideals. The community that he wanted to build on was like pushing him out, and he left to go to build on another chain. That seems like the much more realistic path of how these things progress.
Yeah, unfortunately, I'm going to agree with that too, because I don't see it happening, and it would take unlike Bitcoin, where it didn't really have a face, and Ethereum kind of does, whether it's Vitalik or certain key members of the Ethereum Foundation, it would take a split there, and they all seem very united in that front. So definitely don't see that happening. I kind of agree that the fork is more like losing talent, losing mindshare, losing fees, more than pivoting or forking the chain. But that being said, the one thing that still keeps me optimistic about ETH is the ETFs. Like it's been out for, I think it's 6-7 months now, right? And they haven't performed well, but I think most of that was due to Grayscale selling off, right? But yeah, thanks for pulling up the chart. And if you look at this trend, like how does that not make you smile a little bit as an ETH holder, right? Like it's trending in the right direction. We want to see more flows, and especially under this upcoming administration and more friendly regulations, and perhaps staked ETH ETFs, which they already have in Europe, by the way. This number can go higher. Like these flows can go higher, and Ethereum's not in its first full year yet in terms of ETFs, but I think the launch so far puts it in the top, I don't want to misquote, but I think it puts it in the top 10 or 15 most successful ETFs in terms of inflows, just inflows. And it's not the full first year yet, so I'm obviously kind of being a little bit naughty and like extrapolating there. But if by the time you reach your second year and these things start to become more of a passive flow, you already see this with like large retirement funds allocating a certain percentage to the ETTFs. We see that from the 13F filings. Like it's just going to become another natural part of it, especially when in these larger investors tend to make allocations on a market cap weighted basis.
Maybe that's a good point to make here, or a question to ask. Has the timing of the ETFs kind of coming onto the market and ETH existing as still sort of the key largest smart contract and like world computer asset, I guess, if you want to say, the center of this largest ecosystem within crypto today, does it give it a little bit of like a the roadmap and these issues we just discussed don't matter too much because we have this ongoing potential bid in the future coming from passive flows that maybe do or don't care?
Yeah, I mean, I definitely think so. I mean, 6 months of the ETF, including outflows from Grayscale, the ETFs already hold more ETH than the L2s do, right? I think it's like 2.5, 2.6% in L2s and all the L2s, not TVL, like on the bridges, and it's probably like 3%, maybe closer to 3% on the ETFs, and that's in 6 months. Like ETFs are doing a better job at scaling ETH than the L2s are, right? ETH, the asset.
Hey, you got in trouble for this once. What do you mean by scaling ETH?
Like distributing ETH amongst holders, right? Not scaling it in any kind of form, not putting it in TVL, just scaling ETH, the asset, which is what L2s are doing anyway, right? I mean, it's the more just having more ETH on L2s doesn't in and of itself scale the asset or make it money or anything. It really depends on how it's being used. And when I first learned about Ethereum, it just kind of clicked to me. I was like, oh, in my early days, I thought this is kind of like an app store, global world computer app store, right? And I was just like, there's permissionless. Anybody can build anything on it. It's Turing complete. I kind of got it. And as the years went on, I was like, why can't people see that? Like these smart contract platforms have such a benefit to the world. And I was like, oh, one of the bull cases for ETH was just to be understood. And now I kind of think one of the bull cases for ETH might be large traditional institutions' ignorance, in the sense that they don't know that there's other assets, other smart contract platforms that they can invest in, because it's only Bitcoin and ETH ETFs right now in the US. And then when I talk to some of these larger traditional institutions, some of them which I used to work for and have colleagues in, they would I would talk to them about Bitcoin. They know about Ethereum now. If I mention another smart contract platform like Sui or Solana, they've never heard of it, right? And which is kind of like wild. It's kind of like when everybody only knew about Bitcoin and didn't know about Ethereum, but now Ethereum is coming into the foray. And I think the ignorance of the rest of the market and the fact that none have an ETF yet and Ethereum's market cap was actually a good benefit for these flows.
Yeah, I agree with your analysis there. I'm very excited for, I think it's February 14th is the deadline. So actually a month from the recording day here to file the form, I think it's Form 13F, that large funds have to disclose their holdings. And I'm very, very curious to see who's buying this up, right? If you get, large funds that are known for like buying and holding for long periods of times, that is incredibly bullish from a perspective of like who's wanting to buy and hold this asset. So that's kind of what I'm hopeful for from this. And yeah, I think we touched on this a second ago. I don't want to pivot too hard, but like Ethereum's advantage is what it has going on the L1. And I'm finding out live that Darren's point earlier that they're not including the block time decrease in Pectra. That's like that is super disappointing to me. I know they're also doing the blob increase, and I think that was the pushback on, look, we're putting more load on the validators with the blob increase in terms of the bandwidth they need to consume. Let's not also shorten the block times, which like I get it. That's a smart move to make, but at some point you just want to like ship some things together that create a more holistic package of what the offering is and how it's improving.
Darren, wouldn't max EB also decrease the bandwidth requirements?
I guess so, actually. I didn't think about that, really.
Yeah, but that'll take time, right? That's not like a silver bullet. The validators need to, like, it needs to go live, and then they have to collapse. There are many validators into one. So I'll give them that, too.
Also, I'm curious, like, to what extent that would help, actually. I'm not sure how you'd quantify that.
It seems like the big question here is, are the flows that we've seen through the ETFs today, maybe the guess or the estimate there is that is still largely a retail bid from people who now have the ability to buy it within their their 401k accounts, their various other accounts that they previously could not buy this asset within. That's sort of unlocked those funds to also be used as purchasing power. And if they're already big ETH maxis, then of course they're going to want to buy some ETH in those accounts as well. I think, Dan, you highlight the question here is that are we going to see a similar sort of bid from large corporations, TradFi institutions to maybe begin accumulating this asset on a regular cadence, like the sort of inklings I think we're starting to see around the kind of Bitcoin narrative as it stands today?
Who is Ethereum's Michael Saylor? The burning question. I mean, it's kind of a joke, but it's also true, right? If it's truly a store of value, that's what people should be doing with it. Who's going to be the El Salvador? Who's going to eventually be the U.S. and talking about, I'm a Bitcoin fee truther. I think the fee model is broken, and if fees do not rise to offset the loss of continued issuance decline, then there is a demand problem for Bitcoin. And like that is I acknowledge the existence of that problem. However, the pushback there is, nation states will own Bitcoin and they're going to be willing to mine it as a loss, as a cost of storing their wealth through time, and it'll still be profitable for them to do so. It's like a fairly ridiculous claim until the president-elect of the United States of America, the most powerful economy in the world, says, hey, I want to buy this. I want it on the balance sheet. that's a ridiculous claim too. So if it does happen, like Bitcoin achieved its store of value piece, and like it'll be very, very hard for it to lose it. So those are kind of the ridiculous ladder steps that need to be climbed if you do want to attain this store of value moneyness like thing. Like again, for a smart contract platform, something like global oil trade being settled on chain, that is a ridiculous claim. If it does happen, I can assure you the valuation will transcend cash flows. So yeah, I don't know. I guess, and one last thing on the ETFs, I guess, is people point to them and they're like, oh yeah, the like price is going to pump because ETFs. To me, the ETFs are more like a can of gasoline. Sitting there by itself, there is no fire. But if you pour it on the fire, you get a bigger fire. So the ETFs can't be it's like, again, it feels like this circular thing, same as the collateral conversation we had earlier. It's like, what is going to drive the value? You've got all the tools in the world for things to happen once the value is driven, but what is going to be the catalyst that pushes the immovable boulder of why this thing is valuable? That's the question that I struggle to answer at the moment.
Yep. I think that's a great point. Without demand, desire from the market for these assets, you don't end up in a world that has ETFs selling them to people, which just opens up an additional kind of pile of cash that people have that they can now spend on these assets as well, that maybe they previously did not have, accessibility into Bitcoin or ETH in the world that lacked the relevant ETFs. So yeah, I think I agree with your point there. I think that was a great discussion. Any last big takeaways? It can be about ETH. It can be guesses on who the future Michael Saylor of Ethereum is. Maybe it's Donald Trump. Him and the team, they're building some things on ETH. He's done some NFTs. Maybe the thing that's not been discussed yet is there a strategic reserve of ETH in the back of the mind after the Bitcoin one?
I guess for my view on ETH here, I am personally not super. I wouldn't say I'm super bullish on the whole ETH is money situation. I haven't really seen it built out on that front, and at the same time, I am not bullish on like the DA roadmap, or I suppose like the roll up roadmap. The reason why I think that I'm bullish on ETH is because I do genuinely believe that they see that they're doing something wrong, and they have like an idea that they need to change something. I don't think they've executed it properly. Like looking at like the Beam chain like upgrade announcement from like DevCon, there's very clearly like this idea that like, okay, we need to like step up to the plate in some way. Um, and I suppose that I genuinely believe that the foundation will actually like recognize this in some way and pivot on their roadmap eventually. I think the Beam chain was like a prototype of that. Like, of course, like a 5-year timeline for an upgrade that would like reduce block times like from 12 to 4 isn't that great, but I think it's a start. That's really just like my biggest like take from all the recent developments. So
For me, the only thing I'm looking at, the only thing that's closest to my vision or hope of native rollups is based booster rollups, which is kind of a version of based rollups, which mimics the L1 state and expands the storage. So that way, you deploy an app on an L1 and it automatically exists on every single booster rollup. And, the booster rollups automatically have interrupt. There's no need for like a shared sequence. I mean, the shared sequencer is Ethereum. And then, because of the storage, because it's on multiple rollups, you can get some benefits of parallelization, as well as just tapping into the shared liquidity of the L1 through these base rollups, through these booster rollups, I should say. That's the only thing I'm keeping my eye on. And I think Tycho is building out one called Gwyneth that I'm hopeful for its success. But the glaring issue with that is, what are the incentives to build these things, right? That has yet to be seen. So yeah.
Show me the incentive, I will show you the outcome.
Love it. Great app, guys. Great discussion. Thanks everyone for watching, and we will catch you next time. See y'all. Thanks again to SKALE for sponsoring today's episode. If you weren't already planning to, make sure to go check out Scale's ecosystem. Explore the gas-free ecosystem at scale.space/ecosystem and follow their journey on X at Scale Network, and visit the Scale Research Hub to learn more about the gas-free architecture and growth of the ecosystem. That's scale.space/research.